Well, thank you so much for staying tuned. Now, the Minister of State for Petroleum Resources, Oil, Senator Lokpobiri, has said Nigeria will demand a higher oil production quota at the next meeting of the Organization of Petroleum Exporting Countries, scheduled for November. Senator Lokpobiri disclosed this in Abuja during an interview with the media team of the Nigerian Upstream Petroleum Regulatory Commission, where he reviewed Nigeria's upstream oil performance 4 years after the enactment of the Petroleum Industry Act and the establishment of the commission. He said the country's current quota, pegged at 1.5 million barrels per day, no longer reflects its true production capacity. According to him, the upcoming OPEC meeting provides an opportunity for Nigeria to make a case for an upward review to at least 2 million barrels per day. Well, let's start this conversation with this important development and some other developments in Nigeria's oil and gas space. And my guest is Dr. Chinan Dikwa. He is Vice Chair, Africa Energy Council. Dr. Dikwa, good afternoon, and thank you so very much for being on the program. Thanks for your patience.
Oh, pleasure. Good to be here, too.
Well, Senator Lokpobiri is asking for increased quota from OPEC. Is that expected, considering the fact that Nigeria is trying to increase production?
Well, I think, the way to look at it is if we were ever in any position to ask for a quota increase, it is now. Why do I say that? We're just coming out at the back of a massive run where production has been going up and up and up. Even look from January of this year, we've been increasing production very steadily. But the production has sort of peaked in this band of, 1.4 to 1.5 million barrels per day. And here I'm just talking crude oil. I'm not adding condensate because there are several numbers. So it's sort of peak around there. Now, bear in mind, our OPEC quota is 1.5 million barrels per day. So there's no doubt that we have demonstrated in a very short space of time that we can increase our production quota and take it all the way up there. Tolu, the big question, though, is when OPEC sit down and they have that consideration, because they will in November, they'll be looking at the maximum, what they call maximum sustainable production quota. Okay, they'll be looking at that to see what countries, but potentially can they increase for some or decrease for some. Now, that decision is not just a linear one. Because you ask for it does not mean you will get it. There are several factors that they would have to look at, before they grant that request. One is, your past history. Have you performed in the past? Have you stuck to the quota? Have you closed the quota? Are you well below that? For Nigeria, you can argue we have a case there. But I think one of the big things that might work against us, against Nigeria, if you ask me, is the fact that at this climate today, there's an oversupply on the market. So bear in mind, OPEC is always trying to balance the market, balance price, and balance production supply. In today's world, price is relatively okay, but there is an oversupply, and there's also threat of an increase in production. So all of this will be taken into account. If you ask me, I think it's a bit of a tall order right now. This is my view. It's a bit of a tall order. I think going in 2026, we might have a better chance, I would say.
Well, it's a good way to start this conversation, but I will take you to my other question, that despite 60% shares in West Africa, that's about $80 billion oil market, Nigeria's cost of drilling is still among the highest. Why?
So that's a great question, and it's one that we've answered many times, and I'm going to be very blunt. Nigeria's upstream cost, particularly offshore, is one of the highest in the world. I want that to sink in. So if you look at the technical numbers from NUPRC, they say it's between $25 per barrel and about $40, maybe up to $48 per barrel. Okay. So what that means ultimately is once you produce oil, okay, and you sell that oil. So let's say it's $70 oil price. If you're selling oil at 70, that means for Nigeria, if I use the upper number, $48 in there are just costs that have to be covered first. So your profit margin is at 78 minus 48. That's the only profit margin, and from there, the lost taxes are levied. So that's just a very simplistic way to look at it. But the point here is this: Nigeria has one of the highest costs in the world, but we do not have the most challenging conditions that justify that high cost. Okay, in the last few years, there have been so many artificial costs that oil companies levy on Nigeria, and you see that in the last year, this year actually, President Bola Ahmed Tinubu has tried to roll that back with the new cost efficiency executive order. So I'll give an example: $48 a barrel. If I use that as a benchmark for some of the offshore fields in Nigeria, go to Angola, much cheaper than that, probably $35 per barrel on the average. Go to even Brazil, that has much deeper oil fields than we do have here. In fact, in some cases in Brazil, we're talking 3,000 meters of water depth. The depth of water, 3,500. You go to Nigeria here, we're talking, for the deepest sides, 1,500 meters of water depth. But the upstream costs are still deeper than the ones in Brazil. So it doesn't make sense. And the reason for that is, over the last few years, we've had very poor regulatory oversight. So the regulators that should sit down and enforce this over the last couple of years have been quite lax, allowing companies to put in very artificial costs. You only find that here in Nigeria, unfortunately. But I think in today's world, what the NUPRC are doing is very welcome. What President Bola Ahmed Tinubu has done, without a doubt, is a game changer. The cost efficiency executive order. I'll just describe that. What that does is it rewards the low cost producer. So if you're an operator in the Niger Delta today and you demonstrate to NUPRC that you've produced below a certain benchmark, and that benchmark, NUPRC will set it. If you demonstrate that you're producing below that, guess what? You will get a tax credit. You get a tax relief, and a very substantial tax relief, up to 20% of your total tax liability. So there's a huge incentive for people to unburden those artificial costs, to then try to bring innovation into the system to drive the cost down so they can be below that cost threshold. And that cost threshold will be, the NUPRC will publish it across all terrains, onshore, shallow water, and deep offshore. They'll publish across all of those. And each benchmark, if you hit that, you get the tax break. So what I would say is, watch this space as we go forward. As we go forward, I expect to start to see the cost dropping from 40 all the way down, I think, towards $20 per barrel, which I think is where, NUPRC is trying to drive this to.
But there is still this investment drive we see in Nigeria's upstream. I think particularly now there's still that interest coming in back to back. What in your thoughts is also responsible for that, despite the challenges that we know we have on ground?
Yeah, but Tolu, you asked me the question as if the cost, the investment drive has always been there. The investment drive is just a new thing. The investment drive is 2-3 years old. It's 2 years old, actually, just to be very clear about that. So if you go back, pre-2022, 2023, there was absolutely no investment dollars coming into Nigeria. The whole, I'd probably say 2021, pre-PIA, there was a huge gridlock, very little investment dollars coming in because there was no clear regulatory framework. In the last 2 years, we're seeing huge amounts of investment coming in, more than we have seen over the last decade. I'll give you an example. FID was taken on Bonga North, I think in 2024, $5 billion. That was Shell. We've seen FID taken on the HI field, and bear in mind, this is now a gas field. So check this out. Bonga North is an oil field. We understand oil. We've always dealt in oil. We've had huge FIDs. HI is a gas field. Okay? We haven't had FIDs in gas in Nigeria for a long time. This is our gas field. Udeata, also another gas field. So I think that's the big shift that people are missing. For the first time in a long time, we are seeing FID being taken on gas project. HI, like I say, it's about, I think HI is about $2 billion, just to underscore that. So the key thing here is this is not coincidence. The money is coming in is not coincidence. This, again, is at the back of the tax incentive executive order that was signed in 2024. The tax executive order says if you're producing a non-associated gas field, if you're producing that and you demonstrate that very, very clearly, you get a tax uplift up to 25%. So non-associated gas, produced, and I think it has to come online before. So first gas has to be before 2027, January 2027. You get up to a 25% tax credit. Very significant. That credit can turn a project which is uneconomic and make it completely economic and very, very attractive. So that's one, I think, on that front. And we're seeing a lot of this. Many of these things are being driven by very clever and targeted executive orders, incentives that government has put down, and that's attracting a lot of capital. I'll be very clear, the Niger Delta, many people know this, many people have written it off over the last couple of years, saying that it's a mature basin, it's a dead basin, there's lots of corruption. Right now, we're seeing investment dollars pouring in, and I think that's very exciting.
Well, some would argue with you, looking at 4 years, I think now that the PIA has been signed into law, and some would tell you that, well, we still have a bit of selective implementation, that in some cases, it's not properly implemented to the latter. That's an argument in some quarters. You might want to react to that if you want to. But on the other side, 2.5 million barrels per day is what the NUPRC is targeting in 2026. I spoke to an analyst about this yesterday, and she said that might look like a tall order. What do you make of that ambitious goal?
So, he asked me two questions. One is around the PIA. Bear in mind that PIA was under negotiation for 15 years. Okay, for 15 years, came out at the end in 2021. Honestly, when you look at that document, is it foolproof? Absolutely not. And I think one of the fundamental misses in that document is over the time it was being negotiated, many of the countries had moved past and gone into a lot more sophisticated fiscal terms, which, if you ask me, are still probably a lot more attractive than the one we have here in Nigeria. And our case in point is here you're having President Bola Ahmed Tinubu signing several executive orders which are complementary to the PIA. If the PIA was that foolproof, you would not have need for many of these executive orders, as you see. Okay, so to answer that question very pointedly, I think the PIA is not a foolproof document. I think there have been lots of benchmarks, actually, where you compare the PIA to, say, the Angolan fiscal terms, or you compare it to where you have an MSGBC basin around Senegal or Mauritania. And most of those look much more attractive from a fiscal standpoint. So that's one thing. But back to your the last question that you asked me, and Tolu, I think I've lost that question now. You're asking me about production,
increased production, yes.
I think, Tolu, there's zero chance. You can take this to the bank. There's zero chance that we will hit 2.5 million barrels per day in end of 2025. I mean, we're in October right now. We're in end of or mid of October, if you want to say. I don't see, when I look at the pipeline of projects, I don't see any projects that are going to come to give us that uplift. It's nearly impossible. And even if they are, those projects would have to go through FID and, build, and, you need to start to see first oil. There's no projects scheduled between now and then. The first oil will come in, in that period. So I think the chance of it, if you ask me, is zero, absolutely zero. And we can have this conversation in December so we can corroborate that. Even the $2 million barrels per day benchmark, honestly, I think that's nearly impossible to meet. The reason for that is oil doesn't just come onto the market. You need to start to see some incremental, steps before you can get there. And I think so far we've been stuck in that sort of 1.3, 1.5 million barrels per day, technical, just oil, okay, for the last probably 9 months. We've been in that bun. We've not been able to break out. So I think there are huge hopes for 2026, but certainly for 2025, I personally, if you ask me, I see us closing the year 2025 probably just above 1.5 million barrels per day. Now, I'll be very clear. I mean, you know this so well. Even just the strike that we had for Pengassan, it was a 3-day strike. We can already see the lost barrels in our production for the month of September. We could see it there already. So I think there's a lot of, we have to be very realistic. There's no chance, in my opinion, that we're going to hit 2.5 million barrels per day, by December, or even the first quarter or second quarter of 2026. I just don't see that happening.
I like that. I like you being very factual there. But I must thank you. That's our time for the show today. Dr. Chinan Dikwa is Vice Chair, Africa Energy Council. Thanks for always sparing time to join us on Business Nigeria. We don't take this for granted. Do enjoy the rest of your